Hey guys, different intro for today. A lot of this is a dedication to the band A Road to Damascus. My boy Jacob over in our Discord has been helping me out with the audio, so hopefully the audio on this video sounds a million times better than the audio on my previous videos. Some simple fixes. I'm a complete YouTube newbie. He is part of this band that has over 500,000 streams on Spotify, so definitely go check them out. Again, the name is A Road to Damascus. That song in the intro was their song called Pieces, and honestly, it's an awesome song. I've been checking out a bunch of their songs, and it's really good stuff. So with that, let's jump into the video. All right, guys, so today we're going to be talking about STPK, which is a SPAC that is reverse merging with the company STEM. Now, I'm not gonna lie, I am very excited about this, and I don't normally get very excited about stocks in general, even though it's what I cover on this channel. The last time I was this excited was when I covered BACT and the reverse merger with VIH, one of my more high conviction stocks for the long term. So I have a handful of high conviction stocks that I pay extra special close attention to, such as Tesla, such as BACT, such as Skills, and a few others. But this one is definitely going to be added to that list for me. And I know that STPK has been covered by many other folks out there. But if you've been watching any of my previous videos, you know I like to kind of take my due diligence a little bit to the next level, go way deep into the rabbit hole, try to figure out all the different risks associated with it, all the different benefits and the potential upside, and just understand the business as a whole. You know, one of my main tactics with really understanding a company is when I start reading about it, I'm not afraid to ask the dumb questions. You know, what does that mean? Okay, the company does this, but what does that really mean? And so I went down the rabbit hole on STPK, and I'm excited to share all that information with you guys. So let's get right to it. So STPK is currently sitting at a price of $31 after hours closed on Friday, which was yesterday, April 9th. Today's April 10th while I am filming this. Now, the price has gone through a little bit of a crazy cycle. Looking at my screen here, I've got the 6-month chart up, and you can see a bit of a head and shoulders pattern here. And a lot of that you'll find really across a lot of different SPACs right now, simply because a lot of this has to do with kind of a SPAC frenzy cycle and the market cycle that's been affecting every stock, really. So there was a major run up in the middle of February, as we all know, and then it all kind of came plummeting down into March. Kind of had a little bit of a bounce back in March up at the $35 range, and then just proceeded to absolutely drop to under 25 bucks, where it kind of stood still for a while. And earlier this week, it was actually sitting at $25. What's really funny about this one was when I was reading some posts on Reddit and I came across STPK. I don't usually do this, but I just happened to buy 20 shares at $25 pre-market one day. And the main reason I do that is because it held a lot of my interest. On the surface, it looked really good. However, I hadn't done my deep due diligence yet, so I didn't take a massive position relative to my portfolio. But I did want to take some kind of position because it kind of incentivizes me to, okay, I'm holding the stock. I really want to look into it. Let's find out what it's all about. Now, I know this is kind of backwards thinking. I should really do the due diligence first, so I don't recommend anybody else really do this. But it kind of gives me that extra edge I need to, go spend 3, 4, 5 hours looking into it way in depth. So with that said, I got really lucky. There was this bounce the day I bought it. So I bought it pre-market on April 7th for $25 flat. And it ended up bouncing to, I want to say it was like $30 to $29 intraday on the 7th, and then holding that level and actually going up on April 8th, and then continuing up on Friday to this $31 mark. So it's going back to previous levels. So all right, enough about the price. What is STPK? What is STEM? What does this company do? Why should you care? So STPK stands for Star Peak Energy Transition Corporation, and they are merging with STEM. STEM is a company that focuses on install of battery storage technology, manages a software as a service in their product called Athena, which is an algorithm, an artificial intelligence algorithm that basically figures out how to deploy energy from these batteries and manage grid systems, and is also dabbling in the virtual power plant space. So these are the 3 key areas of revenue for STEM. And we're going to break each one of these down along with the financials, what I'm doing around this stock, as well as just really anything about it that I really found interesting. So first, we're going to jump to the post that I actually found over on Reddit, because as you guys know, I tend to find posts on Reddit, which I don't necessarily use as my main sources or anything like that. It just kind of starts my journey, where then I proceed to go down the rabbit hole and continue to do all my research. So this is the post that I ended up finding from the user 34pizza. So 34pizza made this post. We're going to read the original post because at the top here, we can see that this whole section is actually an edit. But if we start with the initial post that caught my attention, we're going to read a couple different parts of this. Recently, it was announced that Tesla Powerwalls will be used in New York's first virtual power plant. For those who don't know what a virtual power plant is, basically it's the future of how our energy grid will run, having batteries on every home/commercial building, buying and selling energy to each other instead of one huge power plant powering a whole region. Tesla Powerwalls will be used in New York's first small VPP. They link to an article here. As we all know, STEM Inc. has the software for virtual power plants, and it has put their software on Tesla batteries. They stated they buy their batteries from Tesla before. Possibly a new deal? So this was the main article that caught my attention, especially because I am so heavily, relative to my portfolio, of course, invested in Tesla. I currently hold 60 shares right now, and anything that has to do with Tesla, I'm just trying to read about just to stay up to date since it is a majority of my portfolio. But this post actually ended up causing quite a bit of a stir. So going to the edit, it says, since this is getting a lot of views and being used to spread misinformation about STPK, particularly from people who don't understand STPK and think this is some huge groundbreaking news, this is pure speculation that STPK software could be used on the batteries, and they're talking about Tesla's batteries. STPK software, in no way, shape, or form am I suggesting any partnership or buyout like people are saying. So I don't really need to read the rest. It's just more or less that people were misinterpreting this post that STPK was going to have some kind of partnership with Tesla, which of course send this to the moon. That's not really the case. That's just speculation. However, regardless of all this noise around potential maybe partnership, rumor mill type stuff, I am super bullish on STPK. And I really want to go into why. So first, we're going to jump over to this Finance Yahoo News article, which is titled STEM, a wise bet on smart batteries and SaaS, software as a service, driving the renewable revolution. This was posted on January 6, 2021. So I highlighted a specific section that I want to use as a launchpad for the rest of this video. STEM generates revenue in 3 key ways. First, it offers battery hardware produced by top-tier manufacturers such as Tesla, Samsung, and LG. Similar to LCD screens, those batteries get significantly cheaper by the year, allowing STEM to buy them, layer on its smart technology, and offer them at a price that's appealing to customers. The more exciting opportunity, however, is likely STEM's powerful software platform called Athena. The platform serves as an operating system for energy distribution and storage systems, which collects big data and helps customers alternate between grid power, on-site generation, and battery power. As Athena is installed in more places, it collects data to make the entire network smarter. It already has more than 10 years of such data, but its value will only increase over time. Athena should stand out to investors for its financial characteristics. With a capital-light SaaS profile, it generates 80% gross margins and can be deployed quickly. STEM books 10 to 20-year contracts with Athena, making its value easier to estimate. We're going to go deeper into the financials, which is also part of the reason why I'm so bullish on STPK. But for right now, let's keep going on this. Finally, STEM will engage in market participation where it sells power under similarly long-term contracts, where sometimes it acts as a virtual power plant. For instance, Southern California Edison was in desperate need of power and chose STEM's storage capability over placing new gas production in place. Okay, so just to kind of break that down into a little bit of a more digestible format, 3 key ways of revenue, which is what we touched on before. First is they install the hardware such as Powerwalls, such as Samsung or LG's different batteries for different clients around the world. Now, they don't just install other people's hardware. They don't act just as a middleman for installing the hardware, the batteries. The key driver here is their product called Athena. Athena is the AI-driven software which gets layered onto these batteries and manages the distribution of the power. Now, this distribution of power that is managed by Athena actually helps out utility providers, helps out the consumer at the end, helps out basically anybody who touches this whole process. And we're going to break that down a little bit more. So that is the second way that they generate revenue. And then the third way is what is going to grow over time, which is how they're dabbling in virtual power plants. And we got a pretty cool video that I want to show you about that. I'm going to play this video on 1.25 times speed just to save a little bit of time so we can just get a brief understanding of what a virtual power plant is, and then I'll go a little more in depth into it myself.
Energy resources, known as DERs, such as solar PV generators, energy storage, and gas generators, as well as building loads. Up to thousands of these assets can be scattered across residential, commercial, and industrial locations. This portfolio of energy assets, combined into a single entity, operates like a conventional power plant. It brings about new opportunities to the DERs by allowing them to participate in the energy market, including grid ancillary services, such as frequency regulation and reserve, to enhance grid stability. A virtual power plant brings value to the regulator, asset owners, traditional utility companies, and the consumer. A VPP facilitates a more diversified and dynamic energy market by facilitating cleaner energy sources into our energy system. For the asset owners, a VPP captures more value from DERs by enabling market participation, thus bringing higher returns and encouraging investment into renewables. The VPP enhances grid stability with services to better match supply and demand, allowing traditional utilities to better plan and optimize production efficiency. A VPP increases DERs' returns, thus encouraging more renewables installation, leading to a cleaner and more sustainable energy supply, ultimately benefiting the consumer.
All right, so that's just a brief understanding of what a VPP is. Let me break it down a little bit more. So going through my notes here, a virtual power plant manages distributed energy resources. So what DERs actually are is every single component that touches the grid from a solar perspective. So you have solar panels on homes. You have floating solar panels where they can actually deploy solar panels on these little kind of buoy things, and they're out there in a bay. You also have energy storage, such as Tesla's Powerwalls, any other kind of batteries from any other companies that sell batteries. You have gas generators, which are also considered DERs. And then you have what are called building loads, which are solar panels on commercial buildings as opposed to a residential building. So what a virtual power plant does is, instead of that solar panel on your house acting as just a solar panel on your house, it puts that solar panel on a network that is connected to all of these other DERs, and it acts as a virtual power plant as a whole. The main use for this is the elimination of what's called peakers. So a peaker power plant is a power plant that, when your main power plant where your home is getting energy from goes down due to a very, very, very high load, who knows, maybe there's a hurricane coming through, a snowstorm, who knows what's going on, lines are going down, things go down. The virtual power plant can basically kick on in order to provide power when there is no power coming from another source. Additionally, it can soften the loads on the existing grid system. So when it's really, really hot, when it's really, really cold, when there is not enough supply of energy, you have to kind of tend to think of energy as this resource that is stored, because it's really what it is. Electricity being stored in these batteries is a resource that can't just be magically created and deployed in an unlimited amount right now as it currently stands from these main power plants generating electricity for all the homes in an area. So when it does get really hot, when it does get really cold, when they don't have enough energy to distribute to the grid based on the demand that is coming in, they will tap into what's called a peaker plant, and these peaker plants will now run to generate that extra energy that's needed to stabilize the system. The problem with peaker plants is that it's very, very, very costly to run these, and they're incredibly inefficient. So eliminating the need for these peaker power plants is a pretty cool idea, because now you get to tap into all these DERs in a community, and then you can basically keep the whole community online using the power from these DERs with a software in place that knows how to manage all of these DERs and deploy all that energy in the most efficient and optimized way. So going back through the benefits of this, why would you as a resident want to give your energy to somebody else? Well, you would get compensated for that. So it's money back in your pocket because your energy is being distributed out as a resource, the same exact way a utility company does it. Utility companies like it because it supports them to where they don't have to tap into these peaker plants, which cost them more money. So supporting the grid and supporting the system, it takes some of the burden off of their shoulders. For all the people in the community that don't have a DER that's part of the system, it provides them electricity when they need it most. So it definitely helps the consumer end as well. And then from a regulator standpoint, they basically get to implement clean energy in a way that is not costly to them. So everybody ends up winning with the use of a software as a service, Athena, that manages this whole virtual power plant in a community. So just to dabble into how Athena works, it gets a lot of information from assets such as sky cameras and weather sensors that basically tell it which DERs are optimized right now to pull in the most energy, how to deploy that energy the most efficiently from one battery over another battery, among many other uses and items that I just can't go into because it's way too dense to really unpack all the little nuances of how Athena works. Now, one component I really want to hit on is when I was looking at all the benefits for the 4 different parties that touch the grid, I was thinking, how would a utility company really, like getting support from a virtual power plant as opposed to a peaker? I understand it's costly for them. I understand that at the end of the day, it takes the burden off of them, but I just needed a little more evidence. This is that part where me as the researcher, I tend to ask, but give me more. What does that mean? And I actually ended up finding a actual real use case where a utility provider really loves the idea of a virtual power plant. So Green Mountain Power in the Northeast and US, they take a portion of the savings that they get from using power storage units on residential homes to stop reliance on peaker plants during high heat or really cold times. And that savings that they get, they actually distribute back to people, like I was mentioning, with solar panels. So those with the DERs that they are tapping into, they end up getting paid by these utility companies, like I mentioned. And this was a real use case. So that was really important for me. All right, so let's go a little bit more into financials now that we understand a little bit more about STEM. So STEM, the company, is currently valued at roughly $4 billion at a $30 share price. So it's a little bit higher than that right now simply because it's at $31, but we're still sitting just barely over that $4 billion mark right now. As we know, the software allows for automatic switching between battery power, on-site generation, and grid power. And in addition to the merger announcement, the company also announced a key executive appointment. The company will be bringing on Chris Matthey to lead government relations and federal initiatives. So the timing of this article was actually April 8th, 2021. So this was 2 days ago. So I actually found the announcement on the STEM website for when Chris Matthey was actually appointed. So I wanted to read just one part of this announcement just to give you an insight into who Chris Matthey is and why that's important. Matthey's extensive experience includes senior leadership positions at Citizens for Responsible Energy Solutions, Renewable Energy Buyers Alliance, WGL Energy, and Constellation, as well as a staffer to a senior member of the U.S. Congress. Over that time, Matthey has successfully led public affairs campaigns and worked with federal stakeholders on clean energy, sustainability, and resiliency initiatives. He earned an MBA from the George Washington University School of Business and a BA in political science from Clemson University. So what I want to touch on is, yes, he is very experienced, but he also knows a lot of people in office due to his time being a staffer to a senior member of U.S. Congress. Why is that important? With proposals going through Congress right now, such as Biden's infrastructure bill, with a portion of that focused on energy and clean energy use and deploying a ton of money to companies such as STEM, those kind of network connections are going to be very, very important to make sure that they are there to receive as much funding as they can to expand their business as much as they can. They want to be in a place where they can benefit as much as they possibly can from this bill. Going to an article from investorplace.com titled STPK Energy and STEM Will Not Be a Secret for Much Longer. This was published on April 6, 2021. The stock spiked to a closing price of near $50 per share at its peak in February. STPK stock price has been cut nearly in half since then, but I get a sense that this is just a brief pause. The reason for my optimism is that the company's addressable market is likely to increase as renewable energy companies look at energy storage as an issue they can no longer afford to ignore. So as renewables are becoming so much more prevalent in this day and age, every year that goes by, energy storage is one of the key problems that they are running into, where renewables are great to provide energy when you have a solar panel and it's tied into your house. That's great, but it can only provide you power when the sun is out. What happens when the sun is not out and you're not storing that power in a battery power pack that knows how to optimally distribute that power? It tends to take away a little bit of the sweetness of having a solar panel. So battery storage is very, very important, especially for large commercial buildings that are tapping into solar on their building roofs, especially for utility providers that need that extra support, and especially for regulators in different states in the US, such as California, that are pledged to be carbon neutral by a certain year. Looking at STEM by the numbers real quick, I just want to get the point across that STEM is a very, very well-established company in this space. And when I say well-established, I mean they are the gorilla in the room. They are beating everybody, not even close, by far. So let's take a look at these numbers here. 16 plus million system runtime hours. I want to focus in on this one right now, simply because this is important to their software, Athena, the AI-driven software that optimizes how energy is distributed amongst an entire virtual power plant, entire grid, wherever it's deployed. Now, this AI software only gets better with the more it is installed on more systems. With 16 plus million system runtime hours around the world, every time someone gets added to the system and every hour that is added to Athena's use, it is getting smarter and smarter and smarter and becoming a better and better product. And additionally, we can see they're embedded with 40 plus utility partners, 360 plus customers, 30 plus Fortune 500 customers, 30,000 plus market dispatches, and so on. So they are deeply entrenched in this space. We're going to go a little bit deeper into why I was saying they're the gorilla in the room. It's actually from a research report from a famous firm that is known for short selling. That is not everybody's favorite research firm, but what's really funny is this research firm published a report about their price target on STEM, which is $100. Stick around to the end for that research report. Now I want to take a look at the investor relations presentation from STEM. As we know, they make money from 3 revenue sources. So just doing a brief recap on that, it's the hardware plus network integration installation. Hardware gross margins, because you're basically taking somebody else's hardware and installing it, the margins aren't as great as the rest of the other revenue sources. But they do so much of this that even though the margin is less, they make most of their money from this. So 10 to 30% hardware gross margin. Then you have the software side, which is what we've been talking about, which is Athena. Athena optimizes how the energy is distributed from all that hardware that they install. They have an 80% software gross margin simply because it's a software. Then you have market participation. What market participation means is how Athena is deployed in virtual power plants. So even though that is probably one of the more exciting ends of how they can generate revenue and how they're dabbling in it right now, that is still in its infancy. Right now, there are only a handful of experimental virtual power plants being done around the US where Athena is deployed in the virtual power plant, managing how all of that works. So their revenue realization from this is very, 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 very tiny. And we'll take a look at that in a little bit in some of the later slides. All right, so we're going to take a look here at slide 27 next, which is basically how they expect to grow over time. So as of right now in 2020, we can see how the financials from a very, very high holistic perspective are broken down over on the chart on the right. On the right, their 2020 revenue was only $33 million. Now you may be thinking, what? That's it, Matt? They only have $33 million for the whole year of 2020? Yes, that's right. But I'm going to tell you why I'm not worried. Because if you look at this on the surface, this kind of popped out to me as, how does this company have a $4 billion valuation with only $33 million of revenue in 2020? That's insane. But they're growing at a crazy rate. And the reason why I can say that with confidence is that over 80% of their revenue for 2021, which is expected to be $147 million, was already booked during 2020. Now, I don't know if you remember, but earlier in the video, we said that when STEM executes contracts, a lot of the time these are 10 to 20 year contracts with utility providers. These contracts give you guaranteed revenue over time. So what you can imagine is that a portion of this 147 million right here in 2021 is sliding over to the next year and sliding over to the next year and sliding over to the next year and sliding over to the next year. So I don't know if you see a pattern there, but because these contracts are so long and basically guaranteed, all they have to do is just keep proving their case, keep proving their worth, and finding new clients. And as they do that, their revenue just takes off. Now, the other component I want to take a look at is the orange bar in these bar graphs here represents their revenue from Athena, the software with the 80% margin. The blue bar is the hardware component, that 10 to 30%. As you can see, that is the majority of the money they are making, is the installations with Athena as a service on top of it. But most of that money is coming from the actual hardware installs. Then, as you can see, they don't expect to make significant money from virtual power plants for quite a while now, simply because you can see from the graph, you don't really start to see the revenue from that until about 2024, maybe 2023, and we just can't see it on this graph, but it starts to become a little more significant by 2025 and 2026. And that's just because the idea right now is in its infancy. I think it's really cool, and I think it'll be really awesome to look back on this in 5 years and see, wow, virtual power plants are actually, a thing, and everybody's talking about it, and it's super cool. Athena's already at the head of it because they're dabbling in it now, when basically almost nobody knows about it. Heading over to slide number 29 real quick, just to show a little bit more of a breakdown. Here we can see that they show that they're going to have what is estimated to be an 81% cumulative annual growth rate from 2020 all the way through 2026. 81% is massive. It's not normal for a company to grow that much that fast in 5 years. If we take a look at how much money they expect to make from their softwares, we can see that the orange being Athena, like we mentioned, they're going to make a little bit of money from virtual power plant dabbling in 2023. That is their estimate. Then it starts to become a little more significant over time, like we saw in 2024, 2025, and on. Looking over to the left graph, we can see how much money they make from clients in front of the meter and behind the meter. So that's what this stands for, these acronyms down here, FTM and BTM. You can see it's more or less expected to favor front of the meter ever so slightly, maybe 55% of their revenue. What does that mean? What is FTM and what is BTM? We're going to run over to slide number 20 to get that defined. So over here, we can see behind the meter, this is commercial and industrial. Front of the meter is utilities, IPPSs, and developers. Let's just keep that in mind for one brief second as we now jump to another slide. So looking at slide number 33, we can see who they consider their competition. So when it comes to solar technology solutions, their peers are Array Technologies, Enphase, and Solar Edge. When it comes to distributed solar, their competitors are Sonova, SunPower, and Sunrun. When it comes to sustainable infrastructure, it's Bloom Energy and ChargePoint. And when it comes to diversified energy tech, it's none other than Tesla. Now, when we're looking at Tesla, we can see it's the emphasis on front of the meter and behind the meter energy storage business that Tesla poses a threat. Well, real quick before I switch over to the next page, I want to point out that all of these different competitors really focus on one space in this industry. STEM focuses on all of them. They provide the one-stop shop solution for any kind of companies that need this Athena software. So now let's take a look at why people are betting on STEM over some of these other companies when it comes to energy distribution, the battery tech, as well as Athena as the software as a service on top of the battery tech, and then the future for virtual power plants. This research comes from none other than Citron Research. If you have ever been following GameStop, you know that Citron is the devil. But Citron, a famous short-selling firm, actually has a very bullish outlook on STPK STEM. Let's look at the title. Looking Beyond Tesla, the most compelling and real ESG story on the market. Price target, $100. Now, I went through this report, I read it all, and I highlighted some stuff that I just want to read out loud to you guys to give you a little bit more of a feel on what they found. Citron believes that with the new green initiatives under the Biden administration, the ESG story and $2 trillion green revolution is underway in full force, and investors must look for real disruptive companies with leading positions where Tesla was 2 years ago. Without smart storage, the build-out of renewable generation is not possible. Since 2019, 90% of grid interconnection requests have been for renewables and storage. California has already mandated that all new vehicles be carbon-free by 2035 and its entire power grid be carbon-free by 2045. Which company stands to benefit the most from this booming secular trend? STEM Inc., STPK ticker. Below, we explain why STPK should power its way to over $100. We believe STPK is beyond mispriced at just $3 billion, and that's based on when this was originally priced. I want to say it was closer to like $23 when this came out. This was back in January. Given it is the leading AI-powered energy storage system and is dominating Tesla at this game, STPK is the 800-pound gorilla in this market. In 2019, STEM installed 3 times the energy storage of its largest competitor in California, which is the largest energy market in the US. Take a look at this graph. Installer, STEM, 26,991 kilowatts. Number of commercial installations, 106. The next highest in kilowatts, Aero Energy Consulting with 9,006. Take a look at Tesla with 4,938 kilowatts. Now, I want to throw a little grain of salt on this. Tesla, I love Tesla. I have 60 shares of Tesla that I'm sitting on right now, and I don't plan to get rid of. But this is commercial installations. Tesla focuses on residential. Not to say that STEM isn't either, but I just want to nitpick that this is particularly looking at commercial. That right now happens to be the driver for a lot of the revenue in this space, which is why they are considered the gorilla in the room when it comes to these types of installations. Quick quote. As noted by STPK Chief Revenue Officer Alan Rousseau, we have a 10-year head start. Shifting down to this next section, bigger and better than QuantumScape. QuantumScape has clearly caught the attention of investors with a valuation of $25 billion today. However, it is important to note that QuantumScape remains nothing more than a science project with no revenue until 2024-2025. If you like QuantumScape, don't hate on my video, I'm just reading the research. In stark contrast, STPK operates in a TAM, total addressable market, that is 3 times larger than that of QuantumScape and already has 75% market share in California, which is the largest energy market in the US. In addition, STPK has an amazing blue chip customer base, including Amazon, Apple, Facebook, Google, and Walmart. Jumping over to another article from Investor Place titled StarPeak Energy's SPAC merger with battery company STEM is undervalued. The subheadline to this is STPK stock is worth at least $61.89 based on comparison with ChargePoint. If you believe that ChargePoint right now is valued fairly at the price it is trading at, then using that logic, STEM, STPK ticker, should be valued at roughly $62 based on that. Now, keep in mind, this is based on the values of these companies back on February 24th when this article was published. But this article just kind of goes into the whole comparison with ChargePoint and whatnot. And as we know, when we went through the investor slide deck, we know that ChargePoint only competes with them in one way, whereas STEM does a lot more than what ChargePoint does. We have another article here from UK Finance Yahoo, and it just kind of glances over a lot of the things that we've already talked about. This was just a good one that kind of condensed it all in one spot. And I'm just going to leave the links, as always, to all of these articles down at the bottom. And that's all I have for today, guys. So hopefully you enjoyed the video. Let me know if you're thinking about investing in STEM, ticker STPK. If you haven't joined our Discord channel yet, it's down at the bottom. It's always going to be free. There is no cost to join. We just talk about anything and everything. If you ever just want to say what's up to me, I'm on there all the time. If you aren't trading on Webull yet and you would like to and want to get 2 free stocks with a deposit of $100, then there is a link down at the bottom for that as well. All the different sources will be linked down in the bottom. And lastly, don't forget to check out Road to Damascus. Again, my buddy Jacob is who I have to thank for this wonderful audio. Maybe I'll start doing some ASMR videos. Just kidding. Until next time, guys. See ya.